action. Volatility has certainly been back this week. In fact, the VIX is now above 20. That is certainly notable. The consumer confidence reading coming in weaker than expected. The S&P is back below the 6,000 mark, down 0.75%. The NASDAQ, tech-heavy NASDAQ, down 1.5%. And the Dow has gone back and forth over the unchanged line right now, changing as we speak, right? You just saw it go from positive to negative, now down 12 points. And the Russell, well, this has been on a downtrend, and that's down about 0.5%. Well over 10% off its highs. 430 on the 10-year bond yield. Certainly that is notable as yields begin to fall and continue to fall throughout this week as a safe haven. The dollar 106.31, gold 29.17. And you can see that oil $68.90 the barrel, so below $70. That has been trending lower. It's down 2.5% today, as has Bitcoin. It is certainly risk off, down 7% at 87,115. So that is the big picture. Folks are certainly having the jitters here on Wall Street, not buying the dips so quickly. This really started, the sell-off started last Thursday and Friday, and we've had volatility this week too. So the selling continues. In the meantime, as we continue to focus on the market, we have certain names we're watching, and Jenny Horn, markets correspondent here on Schwab Network, is taking a close look at PayPal. It reaffirmed its guidance. You have the details on PayPal.
Yeah, reaffirming that guidance, Nicole, which I do think is critical, especially because the street was not a friend to this name on the back of its earnings. Same with Block. So we were discussing the ways in which it felt like we were being, perhaps from a price standpoint, overly critical of PayPal. But with some updated targets, as now they're seeing high single-digit growth in transaction margin dollars by 2027, with hopes for 10% growth and above in the long term. Operating expense growth at least half of the rate of growth in terms of transaction margin dollars was what they also guided for, as well as adjusted earnings per share growth in the low teens and above by 2027, with hopes for 20% and higher in the long term. They also did say they're increasing their free cash flow in line with net income and distributing up to 70 to 80% of free cash flow annually, with a near-term focus on their stock buybacks. Operating expense, though, as we know, is as a percent of revenue, is basically forecasted to be down now to flat in 2025 compared to the 28% pace of growth we saw last year. They do expect annual growth between 8 and 10% in their total branded checkout payment volume by 2027, among just other financial targets they gave. I mentioned earlier this month that it was a pretty easy beat, though, for their top and bottom line expectations. They also did give some pretty solid financial guidance, but wasn't enough to boost shares. So now I think that reaffirming their financial guidance for 2025 on Tuesday, we're not catching a bid today. I know the overall market is partially to blame, but this is objectively, I think, a good piece of news for PayPal. It's just not being read as such based on the performance right now. But it's the second time we've seen financial metrics that actually were better than feared, and no reaction from the street, Nicole.
Right, understood. Okay, Jenny Horn, markets correspondent. Great to see you. Thank you so much. Good luck there at PayPal. Let's get some insights on the news shaping the markets. For that, we welcome in Stephen E. Orr, CEO at Quasar Markets. Thank you for being here. I was just saying folks are not running in. They're not buying the dips. You're saying buy the dips.
That's right. Good morning, Nicole. Thanks for having me on. Look, I agree. Look, when you see this much going on, we see the talk of tariffs and the talk of Ukraine and the talk of China and Russia. Quite frankly, right now, I think it's buy the dip. I think you now see capitulation hitting. One of the things that I think I said last time was I think that the Fed was going to lower rates. They didn't, but rates are coming down anyway. And we're starting to see that now. And of course, that's affecting consumer confidence. And consumer confidence really showed a really lagging number just a few minutes ago. But I think right now that FOMO is coming into the markets on the downside. I think now capitulations happen. And I like this. I like buying the dip. I don't like selling at the top sometimes or find the tops. I like finding when the markets are starting to peter out a bit. And I think we're starting to see that right now. There's a couple of things that I want to talk about. The first thing is, look, we get it. Inflation has been a little harsh on a lot of people, and it's been really pesky for the Fed right now. But inflation is starting to abate a little bit here, and because of that, I think we're also seeing the Fed saying, "Okay, let's pump the brakes a bit. We don't need to lower or raise, but right now, let's be calm about it and see where we are, and let's let the White House kind of play out." We're already seeing the White House with the tariff talk already. So for me, I'm not too concerned about this. I'm saying buy the dip, and there's a lot of cool plays out there. And you're seeing that because the Dow is up, right? We're seeing value plays, and those value plays are playing out. Disney coming up, IBM being up, Verizon being up, AT&T going up. These are stalwarts of the Dow, and I don't think this is the whole world's melting just yet.
Right, understood. I mean, there are names that have up arrows, to your point, as far as capitulation and what's happening. I mean, you certainly now we're seeing VIX above 20 for the first time in a long time. That shows you that the nervousness is very high. That's why you're buying now?
Yeah, I mean, the rotation has been coming out of tech stocks into value plays. I mean, we saw that with Warren Buffett raising the biggest cash pile in history. He's looking to buy something. And look, there's a good lot of value plays out there. I mean, I think I mentioned a few of this last time. I even got one this morning. I believe Krispy Kreme is now becoming a value play, DNUT. But I've got one that I really like here, and I think that's Nike, NKE. They have a new CEO back in October, Elliott Hill. A guy was the former, he was an intern at Nike, and I think that they've got a new play here. They're going back to basics, and they've got a new shoe called the DN8. I really like this. There are some serious value plays out there, and they've actually changed their tune about how they're marketing to people. And one of the ways they're doing that is going through 75 million Twitter followers with Kim Kardashian. They're no longer just using sports figures. So I think that those value plays out there are getting better. If you're looking for them, I think you got to look for the PE ratios. I think you have to get back to basics, but there are a lot of cool plays out there.
Yeah, I saw that. You were talking about the dynamic air technology, the deal with Skims and Kim Kardashian to try and really boost the athleisure part of that. They have stiff competition. You have Lululemon and Alo Yoga. And so trying to get that out there. I mean, Skims has done particularly well from what I understand. So you're not spooked by the daily headlines. What about the Mag 7? So you're finding names that are value plays, right? You mentioned Krispy Kreme, you mentioned Nike, you had some of the other names that are on the rise, Disney, Verizon, IBM. What about the Mag 7? Do you like those at all? Do you buy those at all?
Yeah, I think one good play out there is Google. I think Google has made a really good move in partnering with Apple, with Gemini. Their AI, I think, at Apple hasn't been the best. And I think they're making a great move in talking to Google and adding Gemini, which is Google's AI, into their own Apple intelligence. I think that's a great move. And I think Google is a great value play. People are still using it for the search engine. People are still looking up maps on Google. People are still using it. And of course, Google Cloud is doing quite well. So yeah, I think there are still some serious plays out there. If you want to look at it from the perspective of Netflix, we talked about that one. I like it under $1,000. And of course, I'm going to stay long NVIDIA through earnings. I think that the Blackwell chipset is going to beat earnings. Either they're going to really show us the new RTX chipset has really done very, very well. And I think that, there's some good plays out there. This sell-off has really showed us where the market could go to. We're there. And I think capitulation has happened. So look, I always call it my grocery shopping list. And here it is. Let's go pick up some stocks and some names.
It's interesting. You said you're holding NVIDIA through its earnings. Tomorrow is earnings day. I think that's a huge part of this week. But I will say, and I know you know this, as many of the Mag 7 have reported already. And even when they meet or beat the street, they've been selling off afterwards. Are you concerned, and you feel confident on NVIDIA and its numbers and all that, but it could sell off even if it has a meet or a beat?
That's correct. I mean, you've seen a lot of these tech stocks right after they have big beats or the big earnings, and they're falling apart right after the stock. But here's the thing. It's not about the earnings. It's about the guidance. I want to hear from the CEO. What's the CEO going to tell me and say, hey, look, here's what we're doing for the future. These earnings are about the past. I want to know about the future. And I think NVIDIA's got an amazing future, especially in AI. We're still in the first inning of AI. And I think NVIDIA's still at the very forefront of this. I'm not worried about DeepSeek. I'm not worried about AI in China. I'm not worried about AI anywhere else. But if we are, it's still hardware, and NVIDIA has that. They have it in the servers, they have it in their software, they've got it in their subscriptions, they've got it everywhere. So I'm not too concerned. And I'm going to tell you, I think NVIDIA has a huge beat. I think Jensen smiles all the way to the bank tomorrow, and I think that NVIDIA is up tomorrow.
Oh, all right. So you think so? We'll hear from NVIDIA later in the day, and so you think it's going to be a winner then, right?
I would not stay long if I didn't believe so. So I'm staying long.
What's interesting is, the market, and you look at everything today, and it just sort of, it's so dismal today because you had a confidence number that comes in weak, right? You have everybody running to bonds. In fact, bonds made a big move now. Instead of being at 4.5 or 4.4, we're at 4.30. That's almost 4.29, isn't it? They're running to the safe haven of bonds. They're running away from Bitcoin and that exciting risk-on trade that they've had. So you're not worried about a day like today?
No, I'm actually liking today. These are the kind of days that I actually live for as a trader, right? I want to see these sell-offs so that I can buy more, right? And I'll tell you one thing I'm very interested in with the 10-year flattening out with the curve a little bit is finally we might see some movement in the housing market. I think that would be very good. As rates come down, there are a lot of people on the sideline that want to buy a house and they couldn't do that. And I think now they're going to be able to do that with rates coming down, especially now with the 30-year at 4.563 on jumbo loans. You probably brought back $2,000 or $3,000 a month.
That's a big deal. Stephen Eeyore, Quasar Markets, feeling bullish, feeling buy the dip. Thank you for being here. Glad you're here. Thank you so much. Plenty more to come here on Trading 360. Up next.